Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to the week that was. Indian assets remained under pressure as the weakness in global markets intensified. Increased hawkishness among global central banks dampened market sentiments as the inflation focus raises the risk of a global growth slowdown. Indian equities remained under pressure for most of the past week, posting losses in the first four trading sessions before recovering sharply on Friday. The Nifty index fell 1.3% over the past week but outperformed most regional peers. With this week's loss, the Nifty recorded its weakest monthly performance in 2022, down 3% in September. The Nifty has delivered negative returns in 6 out of 9 months in the calendar year 2022 so far. Broader markets underperformed Nifty this week with the Nifty Mid-Cap and Small Cap Index down 2.4% over the past week. Overall, sectoral performance was weak, with pharma and IT the only sectors to post positive returns, while metals and utilities were the worst performing sectors. Indian fixed income markets had a decent week, with bond yields falling across the shorter end of the curve as the US bond yields fell from weekly highs and the RBI delivered an in line with expectation 50 basis points repo rate hike. For the week, the 10-year Indian government bond yields remained flat, while the 3-year bond yield fell 12 basis points and the 5-year bond yields fell by 5 basis points during the week. The INR depreciated against the USD and made a new all-time low during the week under pressure from a strong USD, rising crude oil prices and foreign investor outflows. However, the INR recovered later from weekly lows amid likely RBI intervention. For the week, the INR fell 0.8% to close at 81.6 per dollar. In its September monetary policy meeting, the RBI delivered its fourth consecutive rate hike so far in FY 2023. The RBI raised repo rates by 50 basis points to 5.9% and reiterated its continued focus on withdrawal of accommodation to contain inflation while supporting growth. Further, the RBI kept its average inflation forecast for FY23 unchanged at 6.7% and revised its real FY23 GDP growth forecast downward to 7% year-on-year from 7.2% earlier. Its CPI, inflation and real GDP growth assumptions stood at 5% and 7.2% respectively for Q1 of fiscal year 24. Over the coming week, investor focus will likely be on the release of key macroeconomic data as investors gauge the strength of domestic economic activity. Recovery in global markets from oversold conditions could also support a positive bias in the domestic equities. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.